Hi, I'm Chia Wei. Today we'll be talking about Select Asia Pacific Dividend Fund. I'll be talking about the merits of the fund, the strategy and the thought process, and why it's one of the funds that you can consider for your long-term investment. There are two objectives to this fund. The first is to generate a decent long-term average return to investors. And the second objective is really to pay out consistent dividend to unit holders. To achieve the two objectives, we really focus on two strategies. The first one is to buy stocks that pay out dividend, and such stocks typically have a more mature and stable business, and they tend to generate decent cash flow. Now, if you only focus on dividend stocks, sometimes we may struggle to achieve the first objective, which is to generate a decent long-term average return. So to fix that issue, to achieve the first objective as well as paying out dividend, we will also focus on the second strategy, which is investing in high quality growth companies. Now, it means we don't just go after any growth companies out there, we also look at their quality. Quality meaning good management, healthy balance sheet, not too much debt and borrowings, and also their ability to capitalize on the long-term growth opportunities. So typically a company will only be able to pay out dividend based on how much free cash flow that they are earning. Now that's the first basket of stocks. The second basket is really growth companies. Now the tricky thing about assessing growth companies' future cash flow to pay out dividend in the future, it needs more work, because many of these companies, they don't generate a lot of cash flow today because they are still in a high growth phase. So they are spending a lot of money. So the way we think about it is we have to understand that this business needs to spend a lot today so their cash flow is not high, but we will forecast into the future with the addition of capacity, all the monies that they have spent and the future profit that they generate. So that will translate into cash flow in the future. Firstly, this year has been a tough year for us because of the recent jump in bond yield. A lot of the stocks that we like, the internet and software names, have underperformed because of the rise in bond yield. So what we are trying to do this year to adjust our portfolio to better accommodate the current market environment is we have increased positions into banks and insurers. So why banks and insurers? These are companies that tend to do better when the global economy is recovering and bond yield is rising. So these are the sectors that will benefit. Another thing that we have done is really to increase our positions into semiconductor companies. But even in this year, we are continuing to see a shortage in supply, and prices of semiconductor chips have continued to rise. So we have added positions into semiconductor companies. I think the key differentiating element of a dividend fund is really the ability to pay dividend in good years as well as in tough years. I'll just give you an example. In 2018, the overall stock market has declined. So the fund has also fallen by about 12 to 13%. But the fund continued to pay out a decent dividend. In fact, the dividend at that time was above the FD rate. Now, why is this important? Is because we realize that just like we are all humans, when the market is falling, we tend to feel nervous about it. We tend to feel panicky. But it's the worst time to sell our positions, because if you sell when market is down and then you buy when market is going up, it's bad for our investment planning. So the fund has decided to pay out dividend even in tough years. So it helps to comfort investors. Yes, the fund price has fallen, but you are still receiving dividend. This will encourage investors to be patient and wait out during tough years, which is why the tagline for the fund is always "you are paid to wait," meaning in bad times, you are still paid dividend while waiting for the crisis to be over, for the recession to be over, and the stock market to recover.